So we're expecting in like the late spring of this year, which I imagine is soon, HHS is supposed to release their regulation on exchanges. So that'll give us some clues in terms of, what they're expecting from states, and also, we'll lay out kind of what a federal exchange will look like. HHS doesn't talk a lot about what an exchange, if they come in and run an exchange, what it will look like. In my view, is kind of a fear factor. They don't want to give away too many details. They want to say, it's this big scary thing, it's the big scary federal government, please, please, please set up your own exchanges. It's also in their interest, because it's going to be a lot harder to regulate an insurance market from Washington than to have a state do it itself and have local people who know the market in there running it. So they're kind of holding their cards pretty close on what that federal exchange will look like, in the hopes of getting Oklahoma and other states to set up their own exchanges. In terms of what variables there are for states, I think Julie touched on some of this. It's a lot about how is an exchange going to be governed? Is it going to be a new government entity, a nonprofit, some kind of private or public partnership? There's a lot of talk about selective contracting, where California, for example, the first state to pass an exchange law, has said, we're going to use our power as the exchange to bargain with the insurance companies that can give us the best deals. And we're going to selectively contract with those who we think provide the best value. And not let everyone sell our exchange. It's not going to be a free-for-all. Insurance companies, obviously not a big fan. They're a bigger fan of the Utah exchange, which is currently up and running, which Utah likes to describe as a farmer's market. Anyone shows up, anyone sells, as long as you meet criteria X, Y, Z, you're good to go. So I think that's one of the big decisions that, decision between does everyone sell, does no one sell, and, like Julie mentioned earlier, is there a market outside the exchange? And if so, what does it look like? How is it different from the exchange or similar? So I think those are some, key decisions in terms of states that do set up their own exchanges that they'll have control over.
Feds are going to have to work closely with the states, because remember, the states still have a lot of power to regulate rates or not, and that type of thing. So even if the feds set up an exchange, they're still going to be working pretty closely with your insurance commissioner. So that might make some interesting stories too. How would that work out, and the tensions involved there could be quite interesting as well.
Right, so another key regulation folks are looking for is a regulation of essential benefits. HHS is going to be, they laid out some parameters in the Affordable Care Act of this set of benefits called the essential benefits that every insurer will have to cover. They went through like a pretty broad list. Now it's up to HHS to decide what exactly is an essential benefit. And you can imagine any sort of medical device maker, pharmaceutical, any kind of treatment, any patient advocacy group would love to be counted as an essential benefit. And so there's a lot of, but some states already have essential benefit packages. Some states require coverage for autism treatment, some states don't. And some of those other similar treatments, kind of fall in a gray area in terms of who requires it. And that's going to be, like Noam said, I think a key issue to watch. And it's also a concern to the states. There's some concern about moving forward on exchanges until they have this essential benefit regulation, because they don't know how expensive it's going to be, how much insurance is going to cost, because they don't know what carriers are going to be required to provide, and how they'll be similar or different to what the state already does.